Hi, good afternoon, team, or good evening, depending on when you're watching this video. I figured I'm gonna do a post-market analysis. I don't think I'm gonna be sending in charts tonight. I want to take this time to actually look at a chart in a video format, just to give you guys some of my thoughts. There are things that I see in the Discord. There's a lot I'm working on right now in terms of educational contents and courses, developing our websites and all of that. So it's taking a lot of my time away from being as active in the Discord and trading, which is unfortunate. But it's more of a long term game that I'm playing that will be much more beneficial for every member. I don't want to make this community a alert base only community. We are education first, alerts after. I really want every team member in our community to understand how to analyze charts, how to form their thought process when it comes to looking at charts, what you're looking for, having trading strategies, identifying opportunities based on those strategies, how to actually look for opportunities to trade because there's so many opportunities in the market. And I think a lot of traders got lost between looking at so many tickers per day and they're just staring at the chart and they don't know which ticker to pick to trade. So that's been something that's quite difficult in my journey as well. And I think a lot of you might be experiencing the same issue also. So I want to talk to you about that instead. This might be a bit more educational rather than just posting a bunch of analysis tonight. There's some things I'm trying to change right now. So I'm going to be doing some restructuring in the Discord as well. So with that said, let's get into the charts really fast. All right, let's look at VIX. So VIX is currently finding resistance at this $16 level in the 4 hour. There is a gap at the bottom here. Currently, if you're looking at this, you can clearly see there's a trend to the upside and you're pretty much forming what you call a ascending triangle. So a lot of times when you have these patterns, you tend to break to the upside. So it's very likely you could see VIX do something like this and then break to the upside. So you got to be careful with the entire market right now. If you're oversizing in the market, you really need to manage your risk better. Every trade that I take in the market, I think of that trade going to zero. I always size down for zero. I never go into a trade thinking this is a winning trade. I understand my win rate, understand the probabilities of trading, understand the risk to reward ratio in that trade. And my risk is defined before I enter a trade, not after I enter the trade. A lot of times I will use a stop loss or a trailing stop loss. Especially if the ticker is trending and it's a trending day or so forth. It doesn't matter which day it is. I don't think it matters much. But a lot of times I may have a trailing stop of a 15 to 30% that will trail, especially if I think we could move in the direction I want the market to move. And I don't want to set a stop and then I just get stopped out and it just continue to move. I want to continue to have profits, continue to build as it has a trailing stop that trails my stop. If you're not familiar with trailing stop, we could discuss that, or you could just look it up on YouTube. Lots of free content out there. So this is the bullish path here for VIX. The key level you're looking at right now is that $16 level. So price need to break this level for you to see more upside. If price cannot break this level and you see a rejection like this, you're going to come down further. So there's only two paths really VIX could take. There is a gap right over here on VIX. VIX has not been moving entirely with the market. For those of you who understand this, VIX has an inverse relationship with the overall market. So there's only two paths right now VIX could take, and that's breaking to the upside, assuming this here is an ascending triangle and you're breaking to the upside. For those of you who don't know what an ascending triangle is, let me show you. This is an ascending triangle. So really what it is just price compressing within a pattern, a triangle pattern that's ascending to the upside. And then you just have a breakout to the upside. So VIX is currently forming that kind of move right now, as you can see right here. And we're looking either for a break to the upside or a break to the downside. Time will tell which way it'll go, but you got to be very cautious in the market. I'm not going to presume I know what the market is going to do next. Nobody knows what the market is going to do next. We're just taking our best guess, have our key levels, and we just trade those levels during the day. Let's take a look at. Let me just remove that. So yeah, there's a gap here. So you could always see this gap gets filled. We had to come down, and we could always fill this gap and then break, but you're still compressing. And until you see a move in either direction, we're just gonna wait and see what it really happens or going to happen. Today, you literally just trade. You broke below the pre-market low for a bit, and you just chop all day. There's some good opportunities in the market today. You have one, two, three, pretty much three, four moves maybe you got in the market today. But it's very difficult to trade those moves. It's easy to see them in hindsight, but it's very difficult to trade those moves. Going into tomorrow, what I'm looking for tomorrow in terms of SPY is still below the 4-hour support flip resistance level, which is right at back here. It was support, came back, retest, support broke below. Now you retest and it's resistance. You have this gap at the bottom here. You have an A, B, C forming. You either has completed this 5-wave move to the downside, and this was a C wave completion, or you're gonna have pretty much an A, B, and another C wave to the downside, which is gonna come right into this blue box right over here. So that's what we're looking for right now. If not, you're gonna break to the upside. So right now you're just stuck within this range here. So you're below all the EMAs, so what you're really looking at, you could draw whatever trend line and so forth you want. If you want to draw trend lines from the top here, showing you we're following a clear trend. You got to break. Really, you got to break this 4-hour resistance level right here before you could start moving to the upside. That's really what you have to break. As long as you're rejecting these EMAs on the 1 hour, and this trend, you still have more space to move to the downside. So that's what I'm looking for right now. So let's look at QQQ really fast. So again, the range that SPY is trading in is... So let me just show you something really fast that I did notice in SPY also. Where can I get this? Let me see, maybe here. So there is a left shoulder, head, and a right shoulder. So there's also that. So we do not know which side VIX is going to move, but this here you can see a break to the upside as well. So there's a bullish pattern here that is forming on VIX that could possibly break to the upside. But there's a gap here. So if VIX is to break to the downside and fill this gap, then obviously you're going to see this move play out on SPY, and you're going to see that happen with QQQ as well. But for now, the range is just really that 4-hour support flip resistance, and the retest level at the bottom here is 760 to 767. Now for QQQ, looking at a 1 hour, QQQ has pretty much, you could say it's filled this gap that it left, which is that 1 hour gap right at back here that you have. So QQQ has filled its gap right at bottom here. So now we're looking to see whether QQQ is going to hold this level, or is it going to break below this level. Let me flip this into resistance. So here was a 4-hour. I got so many stuff on my chart. Okay, here was a 4-hour support level that VIX broke below. It could be a liquidity sweep. We don't know yet. And it's rejecting that support level. As of now, it's rejecting that support level, which is a 4-hour. The 200 EMA is running right across. You have a pre-market gap down from this morning. So you will be looking at this level here too. You have this trend line running straight across. So don't be too excited if you see price start moving up a little bit, because you could always get this. So I just want you to be very careful. You could always get this move going into tomorrow as well. always look at the higher time frame, your anchor time frame when you're trading, so you're not a sucker who just jumps into a 5 minutes chart because you think it looks so bullish and then price just sells off. Don't do that. Take a look at the 4 hour, the 1 hour, so forth to understand. So the key level going into tomorrow you're looking for is this gap right here at 701. You have key resistance at 708. Mark these levels off your chart. Understand when a support was broken and when it's been flipped to resistance, and keep those levels on your chart. Let's look at the 1 hour. Again, you got to take all of this in context with how VIX is trading as well. So we'll see what the market does, what VIX wants to do. But this here, you either see price do something like this in a bearish case scenario, move up, or you see price just reject right here and come down. Those are both bearish case scenarios. Obviously, the bullish case scenario is that you break above this 708 level and you continue to hold this level and push to the upside and break out towards this resistance level here at 715, 717. Let's look at IWM. Okay, so IWM right now is sitting at a demand slash daily gap. Look at the daily chart. It is right here. That's the daily gap, and it's the demand zone. Price break above, came back, retest, move above, and is retesting this level here again. So it is retesting this level right over here. We saw decent volume yesterday. Today the volume was not good on this sell, so you got to be careful not being too bearish when you see pretty decent volume yesterday and you failed to break above yesterday's previous high. So keep that in mind. You want to see a break above the previous high because you can still come down. But if you're dropping, I want to see dropping on lower volume, or I see a big volume spike, which could pretty much signal that's the seller's climax in a way. Something like this over here, where you see that big volume finally, and you see that push to the upside. Something along that line. I'm going to continue to look at those as I analyze the chart for you guys. But right now, there's still a bear case scenario where you come back and you retest the 4-hour 200 EMA, at this 295 level right here, or which is also the daily 50-day moving average, anywhere between this blue box. We get between this blue box. Very possible I began to long IWM, whether or not it's on leverage ETF or maybe swing trading some options. I'll be careful swinging options as well, especially if VIX is pretty much bullish. But if VIX could break to the upside and we could see VIX moving around this area, I'll be more comfortable in a way to say, okay, that's a big resistance area. We could get a sell off, so you could probably maybe go low. Go long in a way. But we'll take a look at it. Two tickers I'm looking at for the market to bottom are Apple, Amazon, and AVGO. I'm going to talk about that in a minute. Okay, so I think I went over IWM. So the key level here you're looking for IWM is this key support level here that you have this demand level. If you start breaking more to the downside, you're going to expect this 296 level to completely get filled, this gap. And any more downside, you're looking at this level right over here, 295 level. One of the things to just be careful with is that you are breaking on the 1 hour. You're breaking down from a bear flag or a rising wedge. And you have to be careful if you get a retest and a continue push to the downside, because you do have, pay attention to my thought process. You do have a little bit of gap right here, which is pretty much like an inverted fair value gap. So you do have a little bit of gap right over here that you have to pay attention to. That's a 1 hour inverted fair value gap, because a lot of times price will push into these EMAs like you have done consistently. Look at that. The EMAs have never saw a bullish cross. So price continue to push into the EMA to get a lot of people excited. Then it does a rising wedge or a bear flag and it breaks down. You're seeing the same thing here. And then what happens is that you get a retest right over here. Let me show you if you're not able to see it. You get a retest. You don't want to always short the breakdown, but you want to pay attention to the retest of the 30-day moving average, and then you break down. So what am I looking for tomorrow again? I am looking to see whether or not we could get a retest of that 30-day moving average, that 13 30-day moving average on the 1 hour, which is an inverted fair value gap, and you get some selling. This is not a place you want to go long. If you want to front run trades, great. Go ahead, do it on your own money. Burn your money if you want to. I hope you don't, but one of the things a lot of people, I've had a lot of one-on-one mentorship with some of our members, and one of the things they have learned from before is that whenever they see a break of a level, whether or not it's a support or a resistance level, they immediately, if you're breaking support, a lot of times they immediately go short. That is not the way. A lot of textbook may teach it that way. A lot of YouTubers teach it that way who build contents. They're not traders. You don't want to jump into a trade the moment you get a break of a level. What you want to do is wait for the retest of the level, because the way the market works, whenever price break a key level, whether or not it's a resistance or support, buy side liquidity or sell side liquidity, price will come back, the market will come back, retest that level to see whether or not it wants to continue to push above that level, or it wants to flip that level into a support or a resistance, depending on which side it's breaking. So you don't always want to jump into a trade immediately. You want to wait for that retest a lot of times. One of the things a lot of traders get confused over, as I'm analyzing a chart, this is not really to tell you this is exactly the trade you want to take, or if this is how to take the trade, or this is an alert. No, I want you to understand how I look at charts when I'm looking at them, when I'm analyzing them, when I'm setting up my trades, the things I'm looking for. And if I don't get the things I'm looking for, I don't take the trade, I walk away. That is called discipline. Most of you do not have discipline. You don't have any sense of risk management. And that is why you continue to lose money. You don't know when to walk away. You don't know when to manage your risk and how to manage your risk. That is why I'm so focused on risk management, because risk management is what separates a professional trader from who's consistently profitable from a trader who continues to lose money over time. Because even great traders have been through losing streak of probably years and drawdown, inconsistent profitability, but because they've gotten good at managing risk, they were able to keep their losses very small as they figure things out. I'm still figuring things out. None of us stop learning. Every day I'm learning something new in the market. Nobody's a pro at this. So every day I learn something new. I go back, I look at a chart, I try to understand, what did I get wrong when I get a trade wrong? What did I miss? And I try to, take notes of it, save it, and stuff like that, journal my trades so I can get better. And unless you obsess over these things, it's difficult for you to get better. If you think you're going to come into the market and you're just going to think, I'm going to take a trade, I'm going to walk away, and I'm going to get good at this, that's not how it works. You're just doing this as a hobby. If you want to get great, you got to obsess over learning how to analyze the charts, taking notes, recognize patterns. And a pattern here I've already recognized, which I told you guys already, is every time we come up to these EMAs, whether or not it's a 13, the 30, or the 50 EMA, you continue to drop. Every single time you come up to the EMAs, it gives you a fake out or something. It forms some sort of rising wedge or a bear flag, and you drop. So am I looking? I'm looking for the same thing tomorrow again. So we either come up here, or you get that drop right here. I don't know which one is going to be. So it's going to be one of them, but I don't know which one is going to be. So it's very much possible if you start getting that drop here tomorrow, retest, and then you drop. So I don't know which one is going to be. But what I can tell you is that if you're getting the break here and you know there's a support or demand zone and you want to short this, you better size down. You got to recognize, see the context behind things. You're in a demand zone and you're trying to short a breakdown like you have all the way back here, but instead you're shorting in a demand zone. You better be careful because in context, what you can see happen is that price breakdown, it flushes, creates what you call a liquidity grab because this is a demand zone right over here. Buyers were aggressive, and you do a V-shaped recovery right back up. So these are kind of trades where I'm very cautious taking them. If we're breaking down here immediately and we're not getting a retest up here, I would not, most likely will not take the short side of this trade because you're trading in a demand zone and my risk to reward is not too good. I would rather wait for price to come up and retest these EMAs, and then I might probably try to see whether or not I would want to short this trade. But I will not. If we open tomorrow and we break this, I am not shorting this. It doesn't make sense for me because in terms of a risk to reward, trading in a demand zone, it wouldn't make much sense. I would rather wait for that break and see how we get that retest and how volume is, whether or not we're getting sellers coming in heavy to push that price down. Because I want to see if we get that break, buyers are a lot here. I will want to see that retest that rejects support. And if we reject support, then I could go in short. And the way I would do it is if I'm going in short, is you don't know if a stock will do good or not. I just probably set my stop right there. Go short here, set my stop right there so that I have at least a 2 to 3 risk to reward ratio right here. You'll never know whether or not you're going to be right in the trade. Every trade has a probability and you just got to play the probability game. All right, so that is for IWM. So one of the stocks I'm looking at right now is just GDX. GDX and gold. Gold is sitting right at the top of this pattern right here. This is a range that gold is trading in. You had a 1, 2, 3, 4, 5-wave move to the upside. After a 5-wave move to the upside, you tend to see a reversal. I was long gold. Actually, I was long GDX. And I think I exit all my position today on GDX because you're heading into a key sell zone and you could always see GDX or gold move up a little bit into this wave 5, do a fake out as if you're breaking out, and that is when you grab all these buyers who looking to go for a long position. That is when the selling steps in and you fill this gap at the bottom here. So I want to see this move back to the downside if I'm to go long because I want to buy the dip, but I'm exiting my position. We could go higher, but I'm already green in the trade. I understand the risk to reward on this trade is something I posted. And I said, if I hold my position here today, I exit my position here. If I held my position here, the upside, and this is why I sold. I want you guys to understand this, the thought process. The upside potential of trying to time the exact top or the bottom of something or of a stock is not the way to trade. Don't try to time the exact top and the bottom. You're rarely ever going to get it. The upside here within this major sell zone, it's about a 7-8% max. The downside, however, with this gap is 18% and 24%. On a risk to reward ratio, why am I risking all of my profit hoping to squeeze an additional 8% or 7% maximum on this trade when the downside is about 18 to 24%? It absolutely makes no sense to me. And because of that reason, I exited my position. And I want you to take that thought process into every trade. This is when it gets a bit more advanced in trading, how to manage your trades that you're currently in. And this is when you have to look at risk to reward and your risk management, how you're managing your risk, how you're managing your portfolio. This is how you become more of a professional traders and you're not just gambling your 0 DTEs. All right, and that's GDX. This is what I'm looking for, to either see this kind of a move to the upside and where I could possibly jump into puts or something and see if I could catch a reversal in this. If I can't exactly time the top, um, I may try to catch jumping into long position once you have that retracement. But I want to see this move play out, and then I think you're getting a bigger move on gold. And so I'm looking to buy the dip here in gold. So gold is one of them that I'm really keeping my eyes on right now to buy the dip. You're not Don't always look at the zero DTEs, guys. There's so many opportunities in the market that you have to look at. You have to think of this as a professional trader. You're not a zero DTE trader all the time. There's so many ways to make money in the market, and you have to understand, analyze charts and so forth to think of ways that you could day trade, you could swing trade, and you could do long-term investments. Gold would be a great, I think, a wonderful swing trading opportunity to look for the market. And if gold come down here, this is my buy. This is where I'm buying gold. And the way I would manage gold is I'm entering my position here. I have my stop. If we break support, that means you're creating a new low. But the upside potential here again, that's a huge upside potential in gold. That's a 4-to-1 risk to reward ratio. So every trade I take, the reward has to be a lot more, at least 2-to-1 risk to reward ratio. And if I take this trade, even if I'm wrong on this trade, I'm okay with it because the risk to reward makes sense for me to take this trade, assuming that you have resistance right here, and this is what I'm looking for. That doesn't make much sense to me to take, right? Because yeah, price could come up here and reject and continue to break to the downside, but I'm looking for this kind of move because I'm looking at Elliott wave forecast as well. ABC did a WXY, and this might be the low. So I'm going to look at this. So there's a lot of different analysis I'm looking for, and because the volume profile and so forth has a lot of buildup over here, I'm a bit comfortable saying this was some sort of accumulation taking place. There's a lot more context behind why I'm taking the trade. So there's something I will look for on GDX. Let me look at, I'm not going to analyze all the tickers tonight. Let me just look at some of the stocks. Okay, let's look at Apple for a second. Apple is in a rising wedge. It's currently within, it's ranging right now pretty much. So it's ranging. You've had a fifth wave to the upside, and you had a 1, 2, 3, 4, 5 waves to the downside. You could see that actually in the 1 hour time frame when I put it. 1, 2, 3, right here. 4, 5 wave to the downside. And the reason why I have Apple as more downside in this ABC pattern right here is because it completed an A wave, and within that A wave, it gives us a 5 wave move to the downside. A lot of times when, in terms of Elliott wave rules, whenever a stock gives you a 5 wave move within wave A, it is very likely you see a B and C wave play out. And that's the reason why. But you can never be certain of anything. But looking at Apple right now, on the daily time frame, you're currently rejecting this level right here, which is level rejected previously. And you completed, okay, this was wave 1, ABC, 1, 2, 3, 4, and your fifth wave. Whenever you completed a wave, you tend to have the market moves in 5 wave to the upside, 3 wave to the downside in a bullish, healthy, bullish market. You have A, B, C to the downside. Now you have a fifth wave, and now you need to correct this entire move. So you have your A wave, B wave, and your C wave. Theoretically, this is your C wave. Now, in a bullish case scenario, this was the entire retracement. And it's over, and Apple is going to just break to the upside again. I don't know if that's the most likely scenario. It's difficult to tell because you have a weekly cross that is bearish here. So it's something that I am concerned over as well. And you're getting some rejections here as well on the weekly with pretty high volume, kind of decent high volume. So it's something I'm looking at as well because you can see it's pretty much the same thing that happened here. This candle, you got the bearish engulfing. You got a little bit of fake green candles right here as if buyers are stepping, and then you have that huge rejection right here, huge rejection, and then you have that continuous selling. And so we could see that continuous selling right over here as well, that which is something I'm looking for. So it's Apple still looks a bit bearish, even on the daily chart. You're getting that rejection. So it's not one where I'm taking a trade on Apple. I'm not taking a trade on Apple because it's ranging. I have no idea which way it's going to go. Nobody knows. But in terms of Elliott wave forecast, there's still possibility for some downside. So you had 1, 2, 3. So that's an ABC to the upside. Whenever you have a 3 wave move to the upside, that is not good in Elliott wave forecasts. If you have a 5 wave move to the upside, it's saying there is a possibility that you're changing from a bearish to a bullish trend. But when you have a 5 wave move to the downside and a 3 wave move to the upside, very likely that will follow by a 5 wave move back to the downside. And a 5 wave move back to the downside would be this, assuming this is A wave. That was B wave, or 1, 2, 3. Okay. Give me a second. Let me pull this up. I'm trying to show you guys how to look at the chart. 1, 2. Then you have the 3 wave right here, filling this gap somewhere around here. 4 and 5. So this here would be what it looks like. Remove that. Somewhere around here. And if you take this, okay, so it kind of makes sense. So you could expect price to come anywhere over here within this range. So I can even adjust this entire long entry. Say you could even start buying up here. So you can go anywhere over here. We don't know exactly where, but you can see Apple come down here. And anywhere within this range, if you're looking to buy Apple shares, that is where you would probably want to start jumping in, but it could come all the way to the bottom here because you're correcting this entire move. You're correcting. You can use your fib retracement tool all the way from the top here. And yeah, so I would look to do anywhere within this blue box here is where I would look to jump into long position anywhere within this blue box. This is where I think Apple might be coming down to within this range here. So let's see how it goes. Nobody knows for sure, but let's see. Amazon, still think Amazon could do this. It's finding support here, the upside, then back to downside. So that's what I'm looking for. Google, still think Google could see this path here and more downside. This is what it will be. I'm still long Apple shares and Google shares. So it doesn't matter if it comes down. I'm just going to accumulate more. It's not like they're going bankrupt. For NVIDIA, NVIDIA is following our path. One of the things I posted in Discord, and I said, I think NVIDIA is going to come down right back here and into the discount zone where you could see a bounce off NVIDIA. And there you are. Patience. You got to be patient in the market. That's your discount zone right here. So that's where you're probably going to see a bounce. Bearish case scenario for NVIDIA is a bigger move to the downside. And this would be W, X, Y. This would be a bigger move to the downside for NVIDIA. Is it impossible? Nope. But there's a gap right there. We just got to be aware of it. That's the bearish case scenario. But the next bounce I'll be looking for is probably price coming into this discount zone right here. And probably give us a bounce or something right within that discount zone. So those are the levels I'm looking for. You can just mark these levels off your chart. Discount zone is 204 to 197. Another key level here. Let me turn this off. key level here is this retest level right over here. The price is retesting. Right here is the support. Start dropping, you're gonna come into the discount zone. Tesla, still think you could see this move in Tesla. It did. Let's go to the 4-hour time frame. Lots of selling on that volume right there. Rejected, so you had the gap right here, which is something we talked about. I exit all my Tesla TSLA long position, so I'm out of it. So I think it's very likely that Tesla could start a retracement to come back down, and it'll decide whether or not it wants to create a new low, or is it going to create a higher low. So you have Tesla still in that parallel range right there. Once it breaks that range, very likely you're going to see that drop to retest anywhere around. You want to see it hold this level here, pretty much. But if we look at the 15 minutes on Tesla, you completed an A, B, C, and probably forming a WXY. That's your A, maybe A, B, and C. But I still think it's very much possible for you to come down to this blue box. So I would not go long Tesla here. I'll be cautious. Tesla, not a place to go long. Tesla, in a way. I'll just be cautious. Yeah, Bitcoin hitting a sell zone. I would want to see this in Bitcoin. And one of the things I was looking at is Coinbase. So Coinbase, something I want you guys to pay attention to, and this is the last thing I'm going to talk about. How do you find or add stocks to your watch list to watch during the day when you're trading? It's important to understand, like, a lot of people are adding random stocks because they just like the stock. That is not how you do it. You need to avoid trading between ranges. Most people trade between ranges and lose money. What do I mean by trading between ranges? Now, here is Coinbase. Coinbase has a range. This is a range analysis. It's trading in a range. That's the range right there. When price get to the middle of the range, you got to avoid taking a trade. The reason why is because price could go any direction and the risk to reward is 50-50. You're not taking 50-50 risk. You don't want to do that. So on a stock like coin, when you get to the top of a range or you're closer to a resistance level, a known resistance level, that's a stock you want to pay attention to add to your watch list, because that is going to give you a better trading opportunity for a rejection. If you see price is coming down to a known support level, clone this. This goes for any ticker, by the way. It doesn't matter which ticker you're looking at. If price is coming to a known support level, then you pay attention, you add it to your watch list, because this is where you're going to increase trading opportunities and avoid taking a lot of trades in between ranges and lose and quit trading because it's not working out for you, because you're not looking at stocks that you should be looking at. You're looking at random stocks. You have to pull up the chart and see, are we middle of a range or are we closer to a key level? If you're closer to a key level, fine. Take a look at that stock, understand the trend it's trading in. Is it in a downtrend? Is it an uptrend? What opportunities are here? Just look at 4-5 symbols. That's it. You don't need a lot, and really narrow down which one you want to trade. Coin was one of those as well. Have a gap here? Think very much possible. Coin is going to fill that gap. We'll see what Bitcoin does. But one of the ones I was looking at is AVGO. Very much possible AVGO could come down lower, and there is a gap here. and fill this gap. If AVGO comes down and start filling this gap or get to 308, that is where I think you may see the market probably bottoms at this level here because AVGO is in a range. Most bearish case scenario for AVGO is obviously retesting all the way at the bottom here of this range and then move back up because it has done it before, and you can see a retest this range, which is around 308. It gets to 308 level or so, which is this demand zone. That is where the market will most likely bottom, and you may see rallies again. If you're using the fib extension tool, pivot high, let me show you how to use that. If you're doing an ABC retracement, use the fib extension tool right here from pivot high, A, B, and C. Now, A, B, and C. This would be like the bearish case scenario where it comes back down and it fills. It has one gap here, and you have another gap over here as well. So it fills both of these gaps. That is where I think the market will bottom. So AVGO could still see more downside. So I would just be cautious, especially if it breaks this low. So what you want to see is a break of this A wave. If it breaks this A wave, then you're going to see more downside. As long as holding this A wave, it's just a retest and a bounce. You're going to see retest, bounce, but you can still see this because there's a gap up here as well. You can see that gaps get filled. So still probability of a bounce, a fail bounce. So that's everything that I have for tonight. It's mostly a little bit of analysis of the market and how I approach the chart from a more educational standpoint. All right. If you have any questions, just DM me, put it in feedback in the Discord and let me know, okay? Have a wonderful day, guys. And again, I'm not going to be posting chart analysis tonight because I did the video. And just look at the video. Elliott Wave Bot will post all the Elliott Wave charts and so forth. All right. Take care. Have a wonderful day.